Alright, hi guys. So today we'll be looking at Hayleys and RCL. So there was a lot of people who requested RCL, so that's the reason why I'm looking at that today. So tomorrow we might most likely do LWL, and a lot of people wanted Haymas Holdings, so ticker symbol HHL. So we'll be looking at those two tomorrow. So today yeah, let's get into it. But before I get into looking at the charts, I just wanted to tell you guys that so far the series is doing really well. We have posted 4 videos, and we have collected a lot of watch hours, so people are watching most of the videos that we post, and there's a lot of engagement as well. So just wanted to take the time to say thank you for that. Keep watching it, there's a lot more videos coming up, so I hope that all these videos are helping you guys learn about technical analysis. So I mean, that's the purpose of this, so that you guys can get some good content for free. So yeah, let's get into Hayleys. So like we always do, what we do is we simply zoom out of the chart. So looking at the overall chart, we can clearly see a very good uptrend on Hayleys all the way from the COVID-19 bottoms during around the May of 2020, and since then for the past 1.5 years we have seen a clear uptrend. So Hayleys has pretty much gone from almost around 10 rupees all the way towards 140. So now that we know that the trend is up, the overall primary trend, for those we don't know what primary trend is, the primary trend is a long-term trend. So from now onwards I'll be referring to it as the primary trend, but just know that the primary trend, whenever I say it, that means that I'm talking about the long-term trend. So now that we have that aside, we'll be looking into the moving averages. So again, the same thing, the 20, 50 and 200-day moving average. So as of now, you can clearly see that we have very good trend alignment. So when I say trend alignment, that means that the smaller moving averages are were pretty much above the next higher moving average. So as of now, the 20 is above the 50, the 50 is above the 200-day moving average. So we have good moving average alignment, which shows that prices are in a clear uptrend. So now that the moving averages are obviously signaling an uptrend, let's quickly look at some chart formations. So over here we'll look at this. I call this I pointed this out well before prices broke through this range, but I call this a cup and handle. Some people do have a bit of confusion on this part, because the cup is clearly visible, but the handle is, one, it's too long, and secondly, the handle is very horizontal in nature and very too long. So it's two things that might go against a typical cup and handle pattern, because usually in a cup and handle what you would have is a normal cup like this, and you would have another rounded shape bottom, where the handle is obviously the same way, it forms the same way as the cup, but it's a bit higher than the bottom of the cup. So that's usually how a cup and handle would look like. But as of now, the only reason why this doesn't look exactly like a typical cup and handle is because of this long handle formation, where prices are very horizontal, and also at the same time it does not have a rounded base, it has a horizontal base. So regardless, just to let you guys know, nothing is textbook. There will obviously be variations, so that is why you need to be very flexible when it comes to technical analysis. So this is just one of those examples where you need to be a bit more flexible. Different people will view it as a different pattern obviously, and that's natural in technical analysis. Some people will view a symmetrical triangle as a pennant, while some people will view a pennant as a symmetrical triangle. So regardless of that, the only thing you need to know is whether the pattern is bullish or bearish. So in this case, we know that the pattern is bullish. And so that being said, how we look at a price target is again the same way that we have been doing. We look at the height of the pattern. So the height, we know that we have a clear horizontal resistance level roughly at around 86 rupees, and the bottom of the formation is roughly around 82 rupees. So 86 minus 82 is 52 is 34. Yeah, I think, yeah, it's 34. So 86 plus 34 gives you roughly around 120. So that was a price target which was reached exactly on this day on September 1st. So that's how we measure price target from a cup and handle. So if you move more further towards the right of the chart, we can clearly see two patterns. One, this one right here, which is what you call a bullish wedge. I'm pretty sure most of you are familiar with this pattern. So again, the wedge, we know there are two ways we can measure target. One is obviously taking a conservative price target, which is the pattern high, which was roughly at around 125, and also we can take the height of the pattern. So here the highest point is roughly at around 125 and the lowest point is at around 94.50. So you take that, you take the difference and you add it to the breakout level and you get a price target. So and that gives you the target of 140. If I'm correct, I think that gave a target of 140. I think it was 140 or 130, one of the two. So yeah, so prices fell just around 2 rupees short of that target on the 17th of December. But regardless, I still see that there's further upside, so I'll tell you why. So here is the more important pattern that I'm looking at right now. So we are looking at this rounded base over here. So you can see a clear rounded base with a resistance level at around 125, or you can give it a bit more flexibility and assume that the support level is around 122 as well. So around between 122 to 125, that's where my support level is going to be. So you can see a clear breakout. Like I said, how we define a breakout is when prices close above a certain resistance level or support level and volume is there to justify the move. So here we can clearly see that we have strong buying pressure on the 12th of December and also we have a close above resistance. So how do we measure the price target from the rounded base? The same way we do it, we take the height of the pattern, which is at 125, and we minus it from around the lowest point of the pattern, which is at around 94.50. So that 94.50. So that that's 125. So that's around 32.50 points, and you add that to this level right here and you get roughly a price target of around 155. So that is my new price target for Hayleys, solely based on this pattern right here. Now what we have seen historically throughout most of the stocks which are liquid is that most of these rounded bases work really well, and in my opinion, I think anywhere between this 122 to 125 range is a good entry. So, and also another good sign for the buyers is that the selling pressure is obviously falling. You can clearly see the volume is falling as prices are throwing back to support. So that is a really good sign as well. That just simply means that sellers are no longer active and people aren't willing to sell their shares at these prices. So now what you want to see is that we have a good green day with some strong volume, ideally around this candle over here, which is around 2.2 million shares. So anything above 2 million shares, I believe, would signal a resumption of the uptrend. So the next key resistance level is obviously this peak over here, which is the new all-time highs, which is at 138 rupees. So above 138 rupees we might most likely see an extension towards this 150 to 155 level. So yeah, so that's the pattern analysis on Hayleys. So like always, now we need to identify a stop level. So the obvious stop level for me is whenever the pattern gets invalidated. So when the pattern gets invalidated is if prices close below the confirmation line of the pattern. So like I said, even though this is the obvious level, which is at 124.75 cents, I would probably give it a bit more flexibility and assume that my stop level is going to be below this 121.50 level. So if prices close below 125.50, that would most likely be a signal that we have a possible fake move, a fake breakout, and that most likely prices are going to fail. So provided as long as prices continue to close above 121.50, that is a good sign for the buyers, and you obviously have a stop level in mind, so you know where your risk is. So just to highlight everything up, so first we looked at the overall chart. We know that the primary trend is bullish. We know that the moving averages are well aligned. We have figured out multiple price targets, but the more obvious and recent price target is 155 rupees, and we know where our stop level is going to be. That's when the pattern gets invalidated. So if prices close below 120, 150, that is a signal that most likely the pattern has failed and buyers need to step out of the stock until we get a better confirmation that the uptrend is likely to resume. So that's it on Hayleys. If you have any questions, obviously you can comment below, and I'll be happy to answer your questions. So let's quickly jump into RCL. Right, so RCL, here's the overall chart. So again, we do the same thing. We zoom out and look at the overall trend. So obviously we can clearly see that the overall trend is very strong since around the COVID-19 bottom on March 2020. We can see a clear uptrend in prices. So prices have pretty much gone from around the fives all the way towards almost 80 rupees. So that is a very strong uptrend. Now that we know that the primary trend is positive and favoring the buyers, we need to look at the moving averages. So in terms of the moving averages, again, we can clearly see that we have a very strong alignment on the moving averages. So since August 2nd, when the 20 moving average crossed above the 50 moving average, we have not seen the 20 moving average cross below it since that point. So for the past almost 4 months or so, we have continued to see a very strong uptrend in RCL. And also another important thing to look here is obviously that these two moving averages have been a good filter whenever prices have pulled back. So you can see prices have continued to hold above the 50 or the 20 moving average whenever prices decided to pull back. So you can clearly see that these levels have acted as support levels. So now that we know that the moving averages are aligned, let's quickly look at some patterns. So obviously one of the obvious things you can see here is a rounded base. So the rounded base here, the price target was obviously met. So let's quickly go through how we measure a price target. We take the height of the pattern, which is roughly around 60 rupees. The lowest point is 49.90, so let's take this 50, so that's 10 points, and that gives you a price target of 70. So 70 was reached on this day, which was on the 7th of December. So that's one thing, that's one way to measure it, and we possibly see another form of base forming here as well. So you can see that the base, we see another rounded base over here, where the highest point is 79.60 and the lowest point is at 71.50. So let's take it as 71.60 as well, and 79.60. So that gives us 8 points. So you add 8 points towards a high at 79.60, you get 80. So how much is it? 79.60 and 71.60, so that's 8 points. So that gives you roughly around 87.60. So that becomes your price target, which is roughly around over here. So that is a new price target for RCL from this base over here, provided we have a confirmed breakout. Remember that all of these patterns are not confirmed until we see a breakout. You might see bullish wedges, you might see cup and handles, inverse head and shoulders, any sort of bullish pattern, whatever it is, whether it's bearish or bullish, until prices break out, you do not have confirmation. So without confirmation, you cannot confirm the validity of the pattern. So as of now, we can see the prices are in an overall bull market, and also volume is falling. That is natural. Volume usually falls as prices form a pattern. What you need to see is strong volume coming in when prices break out. So obviously the key level to watch here is at 79.60. So we need to see a breakout above 79.60 to confirm the base. And most importantly, how we confirm a breakout is through volume and price confirmation. So prices need to close above resistance and volume needs to increase on the breakout to confirm a breakout. And also, just letting you guys know, I've told this in my previous videos, even though prices break out, there are times when these patterns fail. So which is why you need to obviously have a stop level in mind. None of these are 100% guaranteed. Most of the time they work, but there are times when it fails, and in that case you need to obviously not be delusional and assume that you're not wrong. If you're wrong, you need to get out of the stock. So now obviously that's where we come in. Now we need to look at our risk level. So our stop level, like I said, if you're already in as of now, my stop level would go below this low over here. Or if you want a bit more flexibility, you can, well, this is the new higher low. So I think this is a better risk level to have. So let's keep our stop level at 7150. So this is going to be your stop level if you're already in the stock. If you're waiting to get in, and if you get in on a breakout, provided that we have a confirmed breakout, then our stop level would go below for 7960. So if prices break out, and on the retracement, if prices fall and close below 7960, that's when I would stop myself out. So right, so let's quickly go through what we have spoken on Hayleys. RCL. So we know that the overall trend is positive, the primary trend is positive, the moving averages are very strong and well aligned. We've identified a rounded base over here, which is yet to be confirmed, so we still don't have confirmation on it. We know that provided we see a breakout, most likely our price target is going to be around 8750. And we have two stop levels. One, if you're already in, my stop level would go below the new higher low, which is at 7150. So if prices close below 7150, that's most likely when I would stop myself out if I have a position already. And if I get in on the breakout over here, I will stop myself out if prices close below 7960 on the daily time frame. So just to let you guys know about the important thing, I mentioned this in my previous video as well. So you need to figure out which time frame you're looking at. So we are currently looking at the daily chart. So if prices need to close below these levels on the daily chart to warrant a stop loss. So if prices don't close below that level on the daily chart, then there's no reason for you to stop yourself out. If prices close below that on the 4-hour chart, that is not really a signal for you to stop yourself out. Usually shorter time frames might give you an early entry, but more often than not, if you're looking at the daily chart, then you need to wait for a daily close to either confirm a breakout or to confirm whether you need to stop yourself out or not. So that's an important thing to have. Don't stop yourself out too early. Always remember the time frame that you're trading on. If it's on the daily, then you need to look at the daily for confirmation. If you're trading on the weekly, you need to wait for a weekly confirmation and not get in too early. So I guess that's about it on RCL as well. So we have looked at pretty much everything that we need to look at. Like always, if you guys have any questions, you can always comment below and I will be happy to answer your questions. So also just one more request, if you guys enjoy the videos and if you guys find it helpful, obviously make sure to like it, because that will obviously, I think, help some YouTube algorithm or something. So make sure to like, make sure to subscribe so that you know whenever I release a new video. And I am also roughly around, I think around 3,300 hours away from getting monetization and stuff, so where I can earn money from YouTube. So it would be much helpful if you guys can watch the entire video so that I can collect all these hours. So that's about it. I hope that this will also be helpful for you guys to learn something. And just to let you guys know, this is not at all investment advice. This is just my personal opinion, and this is just how I trade. It doesn't have to be the way you trade. Find your own edge in the market and trade the way that you're comfortable. Even these stop levels, these are what I am looking at. It doesn't have to be your own stop level. So adjust your risk according to the type of trader you are. If you're a risk averse trader, then obviously you need to have tight stops. If you're not, if you're a risky investor, then obviously you need to have more flexibility in your trades and where you stop yourself out. So that's about it. Thank you for watching the video. Like I said, make sure to like, subscribe, and post your thoughts in the comment section below, and have yourself a good day. Thank you guys. Thank you for watching.